Apple will round out the FANG earnings reports next week, but how will the stock hold up compared to its big tech peers? Let's ask the Chartmaster Carter Worth of Worth Charting. What do you see, Carter?
We shall see. Of course, my bias is that it's priced in a whole bunch. We have a well-defined series of lower highs since its peak. And we know, of course, it peaked the same day the market did. It set the high for January 2021. And the issue is interesting. The implied move in earnings would take you right back to the August high from last summer. So we close around 168.70. That high is 176. 3.9% would get you to that high. Either way, I think you would be right to hedge going into earnings. And in the event that it pulls a pop, like a Microsoft or something like that, I would sell into the pop.
How do you see the pop that a Microsoft had, for instance? Is that a sustainable pop? Does it mean anything good in the future for Microsoft, or is this just a pop?
Right. Well, so the magnitude of a gap up or down often determines how much is priced in. And for instance, when a bank drops and gaps 30%, it finds a floor. Or when you gap up like a Meta, notice Meta doesn't move now. If the pop is small, 3, 4, 5%, you can get follow through or the drop. But when it's epic, 10, 12, 15%, markets are pretty efficient in repricing a security to where it belongs. So in the case of Microsoft, I would start to reduce exposure, certainly Meta.
So how do you look at, for me, the big shiny number of Apple is that 182.86, the $3 trillion market cap number?
Well, that's the former high.
Yep. Right? So when you look at that, it's either a magnet or it's kryptonite for these stocks. And usually it's kryptonite first, and then it becomes a magnet. I feel as if they're chasing that number, and everyone's put it into their algorithms as their sell stops, basically. But then it breaks through. Markets have a way of breaking through. What do you feel about that number?
Sure. So I think the first key level is that August high, the high that set the market high for the S&P and for Apple. Were we to get through that, right, then you are looking at the former high. When you first approach a former 52-week high or low, before you go through it, you contend with it. This is a matter of technique, right? So when a stock goes quickly to a 52-week low, it typically doesn't crash through. It backs and fills and then goes lower. So to your point, it is a magnet. I don't think we're going to get there in this earnings print, but if and as we were to get ultimately to the high, you almost never break out initially. You contend, which is to say you back away or you back and fill.
Carter, we will see you shortly on Options Action. Thank you, Carter Worth of Worth Charting. Guy, how are you feeling about Apple?
Well, lower. It's clearly, as Tim pointed out earlier, I mean, big cap, high valuation tech, which Apple is, by the way, is a flight to quality. It's what we're seeing over the last couple of weeks. And I understand it. When banks are a scary place to be, people want to go into these great balance sheets. It makes sense. But it comes down again at some point to valuation and slowing growth. And that's been the story about Apple over the last few quarters. Regardless of what people want to believe, if you just look at the numbers, things have been slowing down and the valuation continues to get higher. So lower highs, lower lows, makes sense to me. You're taking profits here.
Tim.
Yeah, it's the setup into Apple is different than the setup into the other stocks. I mean, every other mega cap tech stock, depending on even what they did afterwards, they all reacted somewhat differently. But the numbers were such that it was a relief week. It really was. Interesting, by the way, Apple's reports so much later than the rest of mega cap tech. I'm not even sure why that is. We usually get them all on the same day. So Apple's now sitting out there mid next week. If you look, and this is putting my Carter hat on a relative basis to the S&P, we're back up to this level that it's been at a couple times over the last year on a ratio chart where I think you run into resistance. And again, outperformance of the S&P of almost 23% in the last 4 months is heroic. And it makes sense. We know why. And a lot of that came after SVB. So, no, I think like others, it sounds like Apple's probably going to need to really knock your socks off, and that may not be enough.
Yeah, most important thing to me is Apple's obviously the largest component in the S&P and in the NASDAQ. Both of them are below their February 2nd highs. And given everything that's happened this week, that to me is a little bit shocking. I don't think Apple's going to break out the indices.